Trading cryptocurrency can be very profitable, but it's not always clear what kind of return an investor will actually get. This is due to the fact that future yields cannot be predicted with any degree of accuracy due to a variety of factors in the crypto world. Diverse yield protocols allow investors to profit from a future yield, but many of these well-established protocols have flaws that can significantly reduce gains. Pendle adopts a better strategy for yield trading to maximize the return on investment. That's why we will start with what is Pendle. A tokenized yield protocol called Pendle gives investors access to an asset's potential future yield. Other tokenized yield protocols are currently in use, but Pendle stands out thanks to its time-decaying automated market maker feature and additional yield components. Users can use a variety of tactics. The underlying asset is represented by a principal token, in short PT, when a user deposits assets in Pendle. A yield token, in short YT, is used to represent the expected yield. Users have more freedom to manage their assets because the principal and yield can be divided through these tokens. On Pendle's AMM, users can trade these tokens and cash them out to secure gains before the expiration date. You can also use yield strategies like long yield, discounted long assets, fixed yield, or a combination of these. Okay, but how does Pendle work? Owners of assets with a yield deposit their tokens into their Pendle accounts. After that is finished, Pendle issues a PT in order to represent the underlying asset that was deposited. A yield token, or YT, is also created, representing the holder's interest in the asset's potential return. The associated assets of PTs and YTs must be claimed before their expiration dates because these documents have a finite shelf life. Yield tokenization. The core mechanism of Pendle is called yield tokenization. The YT represents the anticipated interest earned on the underlying asset, while the PT represents the original asset. The user's control over those assets is maximized by splitting the yield components. A YT can generate protocol rewards and transaction fees. Additionally, it can also be used to mimic an interest rate swap. Automated market maker. It's a specific kind of decentralized exchange that executes buy and sell orders algorithmically, rather than through direct trades. A conventional AMM, however, has a problem because it ignores time decay. An investor may experience financial loss as a result of mispriced assets if time decay is not taken into account. Pendle solves this problem. To maximize capital while increasing exposure to future yields, it employs a time-decaying AMM model. In particular, incremental adjustments are made to more accurately price assets. At the same time, it stops the depletion of liquidity pools. Governance. Owners of Pendle tokens can take part in platform governance. They use vote-escrowed Pendle tokens, vPendle, obtained by staking. The precise amount of them depends on the staking duration, which can last up to 2 years. The value of this tokens in a user's wallet decreases during the staking period. In conclusion, crypto investors have exciting financial opportunities thanks to yield trading. Pendle was created specifically to increase the yield trading industry's profitability. It is equally suited to experienced traders, as it is to those who are brand new to the world of crypto yield trading, thanks to its user-friendly interface and tutorials. You can start using the Pendle app's features right away by launching it. So that's the end of the video around everything about Pendle and its token. Now, if you have found the content helpful, don't forget to give this video a like and subscribe to our channel for more content like this. Thanks for watching and see you in the next video. Until then, goodbye.